The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And of course, as always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So, as I warned you earlier in the week, kind of thought that this market was all about lower highs and higher lows, and that we were on the road to nowhere. Oh, I love that Talking Head song. We're on the road to nowhere. And on the road to nowhere means that we're waiting for something, or that something will happen. That something will probably cause many on the what's the rope pull thing? Tug of war. Got a bunch of people in a tug of war. And it's like you got 20,000 people on one side and 20,000 people on the other side of the rope. Eventually, a lot of those people will just get bored. They'll decide that it's better to go over and roast some weenies or cook a hamburger, and they will fall off and pretty soon you end up with about 6 people on each side of the rope. And what happens? Well, 6 kind of people on one side go, you know what would be funny? We're just going to let go of the rope all at once, and everybody's going to fall down, and they're going to look like fools. And kind of what we're waiting for now. We're waiting for a few people to get whittled off the sides, and then one side to say, you know what? I'm going to blink. And I don't know which way that blink is going to be. I've got probably in the newsletter, I probably had the fewest charts in a couple of months. There just wasn't any, there's not a lot going on in any particular index. When crude was around $48 or so, every single energy stock looked like it had made a bottom. We rode that up through last Wednesday. There just wasn't any juice. We got rid of them, thank God. They all came back down, and even maybe a little worse than they were. But the charts said that they looked pretty good. And what does that kind of tell me? Kind of tells me that a lot of stuff we see right now is kind of a mirage. Maybe it'll work for a little bit, but don't get married to it. It's just time to date. And if you're dating, I think it's speed dating. I don't think I want to be. There was somebody in the den. I said, I think I have all the risk that I want going on to this weekend. I have no desire to add any positions. And he said that he didn't see any risk. Well, there's always risk, and it's always a lot more than you think. Probably the worst thing, what's the quote? The craziest thing the devil ever did was make believe that he didn't exist. I think risk is kind of like that. It sucks you in, like the sirens trying to suck the sailors in across the rocks. It's always out there. There is no riskless trade, and probably the worst thing I've seen a lot of people lose money in many of the trading chat rooms, especially around 2000 to 2007. I think that was when I was last in any chat room other than the Tiger's Den. But it was just insane to watch people sit there and spin their wheels in the mud. They didn't get out of the car. They didn't figure out that they were just stuck in the mud. They just watched the chop and slowly got hacked. And the death of 1,000 cuts. Maybe that's the best way to say it. For me, I'm not going to be chasing and looking for dollar bills blowing in the front of a steamroller that if I would just slip for a second, I'm going to get crunched on. Now, could I be wrong on the risk? I could. But to say that there's no risk, I think that's incredibly dangerous. Or low risk. There's lower risk. I don't think that there's any low risk. Kind of just like flying, every time you start getting complacent is when you get your hand slapped, sometimes even worse. Volume is, what are we off? 5 points in the S&P cash right now. Volume is, what are we going to call it? Lighter. I'm going to call it lighter than it was yesterday at this time. But again, it's all about the last 15 minutes of trading. We haven't had a lot of volume come in on Friday's closes either. So we may have a very light volume day, both to the, smaller upside and the smaller downside. But my guess, a lot of people have emailed me, which you can also, at path@tfnn.com, and asking me what do I think the French elections will do. I don't know. I think it's kind of baked in that Le Pen's going to win. How much she wins, what kind of power she has is interesting. I think she was about 2-3 points ahead from the polls that I was reading that didn't come out of Paris. Kind of like reading a poll here that came out of New York. You would have sworn that our president would have had a C for the start of their name, last name anyway. And you would believe that the communist was winning if you read the French newspapers from Paris. If you read the papers around the country, especially in the countryside, they kind of feel like they were kind of forgotten and lost, a lot like the U.S. Out there. The big city has lots of people, and if you add them up, the rural areas have lots of people in France, and they kind of feel like they got the shaft. So I think they'll probably go the way of Brexit, the way of the rest. And the question is not will this change a great deal for people in France? I don't know if it's going to make that much difference. I think the bigger thing is going to be how fast now does the EU unravel? Because if she's president, my guess is in the first year they move to leave the EU like the British have. That means that we are left alone with basically a bunch of third world economies and Germany, and that is it. And, of course, that means the end of all of that. Don't know if there's anything else you can read into it, but since I have no guarantee or even a good inkling if all the stuff I'm saying is true over in France, I'm more than willing to stand on the sidelines and understand that there is a difference between speculation, thoughtful speculation, and gambling. For me, maybe you're different. Maybe you were born in France. Maybe you live in Liechtenstein and have a view that I do not have. But see, I got to. If Liechtenstein, I've got $5 for working it in a conversation. I would have gotten $5 there. Liechtenstein. We'll be back after this break.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And welcome back, folks. As always, we'd like to start off the show with a little bit of history.
And it's all just a little bit of history repeating.
And what do we have going on today? Well, went right by it. On this day in 1918, the well-trafficked skies above the Somme River in France, Baron Manfred von Richthofen, the glorious German flying ace is known as the Red Baron, is killed by Allied fire on April 21st in 1918. He had 80 victories under his belt when many of the top flyers at the time were struggling to get 20. On this day, he led his squadron of triplanes deep into Allied territory. And for the last 6 months of the war, he had a plane that was painted red. Why they called him the Red Baron. Anyway, he flew into France to shoot down a observation balloon. The dirigible, actually. 2 miles behind the Allied lines, he chased past an Australian machine gun battery whose rifleman opened fire. Richthofen was hit in the torso. Though he managed to land his plane along the road from Corby to Bray, he was dead by the time Australian troops reached him. Many people argued that someone had shot him down, and at least at the time, the people that had come upon him said that he was shot from below, and makes me think that he truly was just flying too low over a machine gun nest and got popped. And there's always a lucky bullet out there for one of us. I worked for and did some work for, let me put it that way, I did work for Electronic Arts, and they had a game that was very fun. It was all about the First World War. You were basically these fighter pilots, and you ran around strafing dirigibles and balloons and a lot of other stuff, but a lot of historical facts in it. I learned a lot about what was going on in the World War I, at least from the point of flying back then, and why things were pretty horrible on the ground. If you were going to buy it, probably the best way to buy it would have been in the air. Pretty horrible lives for everybody on the ground, and pretty good lives for all the people in the air. There was a little bit of chivalry left, even though they were gassing each other down on the ground. By 1918, of course, the war was just about over. And if he would have just made it a little farther, I think he would have continued to be a big man on campus. Surprisingly enough, he was a great deal of respect, even for the French and British, for him on this day in 1918. And of course, Snoopy got his guy, right? Finally had somebody that he could think about on that doghouse, which is when I was growing up, all it was. Snoopy on his doghouse playing the Red Baron. Anyway, we shall persevere and move on. It is a mad market. So we will take a look at some stocks out here. Again, we'll kind of look at the 52-week highs after we go through some other ones. Some questions coming in back here. We'll take a look at it. What do I think about the close today? I don't know. I'm pretty sanguine. Could we close right here at 23.50? I think we could. You know, a couple of points up or down. It is fairly light volume. It wouldn't really matter that much. If you're playing intraday stuff, I don't know. It's a choppy market. Seems to me like it's all good and fun till someone loses an eye. So for me, I'm more than willing to stand back from the fray. I will wait until there's a clear and abiding direction in the markets. 23.50 on the S&P cash. As I said, volume kind of light for this period. We've come off a low of 23.44, and that kind of seals off the bottom side. Don't know how many people got short earlier in the day, but maybe they end up covering before the end of the day. Maybe we get back to flat on the day. I just don't see anything other than lower highs and lower lows until some kind of big event blows us out of this trading range. Okay, what else do we have? Earnings. Let's go through a few of these stocks fairly quickly. SLB, Schlumberger, not getting any slumber today. Yeah, see what I did with that? I'm getting actually fairly good at this broadcasting business. Down on heavy volume of 10.5 million shares, 6.5 million shares so on September 27th. So we've broken through that. We're going to break through there at least with twice the volume today. So that does kind of put a pall on any kind of energy. Now, do we close back above that today, and this is just a false breakout on huge volume? Even if it is, it means that we're more likely than not going to at least have a consolidation. You normally don't get V lows off of high volume piercings of previous lows in the market like you saw today in Schlumberger. A couple more questions about SMHs. And a lot of people saying, well, what's going on out here? You know, this, we said, you know, it was kind of a coin flip whether you could pull the trigger on this as a short. Let's see if I've actually got that. I may still have it up here. Do I? No, I deleted it. Hang on a second. Maybe I'll figure a way to bring this up. In fact, I'll do it during the next break. The NASDAQ is very weak compared to the NASDAQ. But again, you haven't seen that kind of weakness develop in any kind of huge downside. Have the majority of stocks in the NASDAQ continue to move a little lower? Yes. The big stocks, though, have been there to take everything. And what else do we have out here? Okay, we've got a little bit of movement. Looks like they're going to make a run to at least go out unchanged on the day now. Anyway, semiconductor holders, you got a little doji out here. You're right at the perfect level. If you had a compelling reason to say that we were going down on Monday, I'd say, okay. Other than that, I'm thinking that you could easily wait till Monday and have a more probable profit. It's probably going to be smaller, but your odds of winning and waiting till Monday are probably much better. So what else do we have? SMHs, so that answers that question. You can give me you can email me at path@tfnn.com. You can email me, same there, at path@tfnn.com. You can call me at 877-927-6648, or you can put a message in the den. Okay. What else do we have? I wanted to go through, is that it? I wanted to go through, yeah, I think that was it. Honeywell. Let's take a quick look at Honeywell. That was the other big earning of the day. It did pop higher. You do have significant volume. You're not going to hold the previous highs that go back to the 1st of March. But you had 4 million shares on that day. You got more than that already, 4.6 million shares. So certainly not a short out here for Honeywell. And that, of course, means that the rest of the NYSE is kind of hard to pull the trigger on either. 2352 on the S&P cash. Yes, we'll take a look at CLF when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Good comment in the den during the break, and it's Rich Anderson's take on Le Pen, vote on Sunday. So a given Le Pen win and a potential Eurozone panic, does money flow into the United States, or does basically the U.S. companies getting hit by the disruption overwhelm it? And that's the problem. We don't know. What I can tell you is that markets since the Brit exit, the election of President Trump and others, markets never actually moved as I thought it would. It's always had some kind of weird change. As soon as the reality hit, the mind thought of all the people trading it had changed. So again, I'm kind of waiting for Monday. Don't see a lot of reason to get out in front of a train going into the weekend. Well, what do we got going on here? Okay, so we're off 3.5 points on the S&P. Cash volume continues to be light. Question about Cliffs Natural Resources. This had a kind of decent sign of strength back on the 9th of November. We've come back and kind of touched that. Unfortunately, what you were looking for was, well, in fact, exactly what you were looking for was half of that volume. So let's call it 28 million shares. You got back into it with 15.8 million shares. Close enough for government work. You've gotten a little bounce out here. Now, again, my rule for picking up V bottoms is that the energy off the high was less than it was off the last major low, and they were approximately the same. So to me, I would pass on this one until it had a consolidation. I would hope that this thing would go sideways for 7 to 10 days and volume just totally dry up, maybe even get down to $6.40, somewhere in that, maybe $6.35, and all the volume just dry up. And that may take several days or a week. Maybe we just plunge down in there come Monday if things don't go our way, and then we pop right back up into the trading range. That would be yet another good signal that Cliffs had put in. I think you've got a low. The question is, do you want to get into this low before you have any signal that says that this is over? And that is, you've got a nice bounce on half the volume. That's not uncommon. So if you're trading this thing for 2 or 3 days, it's not uncommon to get a bounce with 50% of the volume of the previous low. What is uncommon is to get a straight V bottom out of these without some level of consolidation if the energy was good off the top. And you really had kind of the big day out here that tells you energy off the top on the 23rd of February that came down with 35 million shares. So do I think you have a tiger by the tail? Yes. And again, that's a curse and a blessing, right? It may not be able to get around and get you, but it can whip you around a while. And that would be what I would be afraid of right now. What else do we have going on? And no, I'm not going to ride through Lutz. Let's go through some 52-week highs real quick. Take a look at some of these stocks and see if we've got any signals. I've been doing this on kind of a daily basis to actually say, okay, when these things really do exactly what Applied Materials did, has the volume really just fallen out back at these highs? This is why I'm kind of still reticent to pull the trigger on an SMH trade or a SOX trade. March 21st, $39.81, 13.4 million shares. And of course, we popped up on 13.4 million shares on the 19th. We were a little higher yesterday on 9.4 million shares. You got 5 million shares now, and you've broken the highs. But I kind of look at it as if you get anywhere within the previous high with the kind of volume you need within 0.5%, then it probably tells me that there's no conclusive evidence that you're going back on. And we are looking, these little labels are always 0.5%, the highest volume within 0.5% of that previous high. So this is kind of a little bit of fuzzy logic out here. I don't take the volume from just the absolute high, but actually the volume that was kind of close to the high as the most energy, because I've seen a lot of stocks continue higher because they'll get the volume and they'll get within a couple of cents of it, and then they just continue on for the next few days. So it's probably the best way to keep me out of trades that are iffy. And I'm not saying this is some kind of huge sign of a sign of strength out here in Applied Materials. It's just not a sign of weakness. So again, kind of tough to say, you've got some kind of overwhelming odds going into these trades. Ta-da, Disney. I've got to get to that. I'll get to it on the next break. Disney has been going into this long-term high. Wanted to see how this one, again, back in the 52-week high today. It is going after this gap down. The gap down happened on November 27th of 2015. Did so on 15 million shares. Again, not a rising sign, a rousing sign or an endorsement. 6 million shares on the 18th, 5 million shares on the 19th, 5.2 million shares on the 20th. Today, let's call it 4 million shares so far. And you're just filling that gap. Now, you can either chew away at that gap for a long time, or you can blow through it. This is kind of chewing through it, but again, not giving you any kind of clear sign. Could this make it up to 118? With the zeitgeist of everybody thinking that Star Wars is going to be a big deal, maybe it could. Maybe that's going to offset all the horrible stuff going on at ESPN. We looked at Honeywell already. JD.com, we've talked about this stock a couple of times this week as we watched it go after the December 17th, 2015 high, 33.48. This is a Chinese.com stock. 10.4 million shares. We've kind of, again, done the same thing. 10 million shares on the 19th, 8 million shares on yesterday, and today about 8 or 9 million shares. So we've had thrusts with at least the same volume into a lot of these. And when I look at AMAT and I look at this one and a few others, we'll take a little bit more move on it. Well, we had MasterCard and Visa out with earnings this week. You had a nice move higher yesterday with 3.5 million shares. You really never got the kind of volume day that I wanted to see in MasterCard. That's the October 31st high of last year. That was almost 10 million shares. 3.5 million shares as we kind of gone through this higher high. Not real happy with that. We did have some decent volume that's never been retested back on the 1st of February. Man, that's the problem. These things don't look that great at the highs, but they also don't look that great to go after the lows. And it's just kind of a very chop-ridden market. With McDonald's, again, no sign out here. No breaking of any 3x3 displaced moving average, just a little higher. We'll talk about the reasons why to be bearish when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And one of the reasons I think a lot of people got kind of a chill up their back when they look at the NASDAQ and think that the wheels should fall off the wagon is one that I kind of agree with. And that is that if you look at the NASDAQ Summation Index, that the bulk of the stocks have been slowly selling off or going lower, while a handful of stocks have held the index up. This is normally a sign that the index is starting to, like a tree, rot within. And it may look fairly good, but a big wind comes up and all of a sudden the tree falls over and you see that ants have been eating the inside of the tree out for the last 2 years. There wasn't really anything there. And you kind of wonder, well, why didn't that tree fall over earlier? That is a problem here. Now, the last couple of days has seen the summation index kind of turn back up. Normally, you don't want to trade against that. And especially with a market that's continuing higher, I'm going to want to get some kind of decent signal. I can concur from this that overall the NASDAQ is weaker than the NYSE. If you were looking to place a trade, you probably have a better chance in the NASDAQ if the markets do turn down. I just don't see it, and the last few days have actually turned up on the NASDAQ. You want to wait for that to turn back down to get any kind of acceleration. At this point, though, if you saw a good, bright signal, I wouldn't bet against it right now. So just one thing to look at out there, and that is that for the most part, there's been selling in the NASDAQ. It just hasn't been the 4 or 5 or 6 stocks that literally say where the NASDAQ is going to go. Let's take a look at others. We looked at McDonald's. There's just no real movement out here. A lot of discussions earlier in the day whether or not Microsoft was falling off a log. Looks pretty darn good to me today. I can't remember who was posting. Maybe I read it wrong, but it certainly seemed to me like the end of Microsoft. Maybe it was yesterday. I get easily confused. But a new 52-week high for Microsoft today. Volume has come in at 21 million shares so far, compared to 22 million shares we've had previously on the 5th of April. And now if we go back to the 27th of January, you had that 44, let's call it a 45 million share day. So you're kind of in that 20 million share move back up now against that 40 million shares. So you can kind of look at it as breaking through that previous high. But again, not a lot to hang your hat on. Every time someone says this thing is busted, it goes higher. And it's just tough to see everybody shorting these things and getting blown out. Annaly Capital Management, another one of these stocks that looked like it was going to continue going on a rather large ABC. This one's got a little bit farther to go. Still no real signs out here that this is closed below a significant short-term level, although it's touching it today. So another good reason to probably take a look at some of these on Monday and take a look. Starbucks, pretty horrible earnings. And what you actually got was just another excuse to buy it. Now, this one has had a couple of good days off the recent lows. 12 million share day up on the 19th, a 12 million share on the 20th. Today, though, just 5.5 million shares as you kind of break through a lot of these highs. And, you're really kind of looking for some big days out here. About 9 million shares would have been kind of nice. It's just a kind of a mushy market, continues to be problematic. SWK, which is Stanley Black & Decker, another 52-week high. Now, this one had a spike, closed back pretty much underneath it. I think that was a buyout rumor back on the 16th. It is breaking through it today with good volume, not closing above it, though. But it could be a little bit of weird stuff going on. Again, I don't see anything that says pull the trigger out here. United Health, UNH is the symbol on this one. Another one, let's take a little closer look in this here at the previous highs. Now, March 16th, 3 million shares at 172.14. We've gone through that high. Doesn't look like we're going to hold it, but we've got 2 million shares here today. Yesterday, though, we already had, as we went through that, 3.6 million shares. So, we've had some volume yesterday. We got a Friday out here with kind of light volume. Again, Monday looks like a much better day to take a look at taking a big swing than today. UTX, another one of the big ones out here, on a 52-week high. 115.28 today. Some decent volume. You needed 5 million shares from the March 1st, 2017 high at 114.44. What do we got? 3.7. So we're going to kind of come in close to it. I think we can by the end of the day, but not a very clear picture. Visa, another one of these stocks pushing 52-week highs, going into its previous spike of March 20th. Did so that day with 9.4 million shares at 92.05. We already have 15 million shares today. It's not holding that high, but still have a lot of volume, which implies that 92.79 is still going to get tested. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And PetX, PETX. We talked about this stock a little while ago, and kind of all the great things going on. When we talked about that, this was the stock that was just going sideways out here off this high volume low. You had your first sign that this thing was ready to break out on the 13th. It's kind of moved back up, but not a bad move from, 560 to 630 today. I would really love this thing to come back down to $5 on light volume. But this is a pet drug company, and all the great parts of charging lots of money for drugs and no humans dying, which means no big payouts for all kinds of issues, which is kind of nice. Probably a good business to be in as we look at that. And that's from TKC in California. Thanks for the email. We also have another one out here for Citibank. What do I think of Citibank? We get Group, Citibank. The one thing, Citibank Cash, Citibank Product, Citibank Citigroup. What's the ticker for Citibank? Is it just CB? Is that what it is? Citigroup. Citibank, though. Well, I'll find the ticker. I just can't remember it off the top of my head. Maybe, just C, okay. Hadn't looked at it in a while either. We'll look at that when we come back for the home stretch. And then I'm out of here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
During the last century, there have been 34 bear markets, approximately one every 3.5 years. And since 1946, bear markets have accelerated to a rate of one every 5 years. When it comes to market corrections, the kind that take back 10% or more of your gains, they've been occurring at a rate of one a year during the last 100 years. Now, if you're in your 30s or 40s, you can probably weather the storm. It only took 13 years for the S&P 500 to get back above the highs that it made in 2000, which is much better than the NDX 100, which took 16 years to do the same. Look, it doesn't matter what age you are. There's nothing more important than protecting your nest egg. And on Wednesday, April 26th at 5:30, I'll share with you 2 simple patterns that have been present at the beginning of every bear market and how knowing these will save your retirement. We here at TFNN believe this knowledge is so vital that every member of our Tiger family will have a link on their members page for this 30-minute presentation. If you're not a member, come over to the homepage of TFNN.com and sign up now. TFNN.com, we've got your back.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come out, I see the Tech Insider just came out a minute ago. You can always go to the front page of TFNN under newsletters and check that out if you're looking for something a little bit more long-term than what we're doing now. I'll be adding a new position, I think, next week, as long as the market does okay. But we'll add another one that I love in a sector that seems like it will be the big thing in the next couple of years. So check that out. Of course, you can always check out my daily newsletter, The Path of Least Resistance, by going also to the front page of TFNN and looking under newsletters. But interesting. Anyway, Citigroup, I don't know why I couldn't think of the symbol. C, one of the easiest to remember. Probably because I'm already out at the pool, already thinking of putting on the bathing suit and hitting a great weekend for what's going on. But, it's the question is a good one. What do you think of Citibank after all these years? I was showing it to someone the other day and reminding them about the 1 to 10 reverse split a few years ago. Hadn't looked back at the chart. If you were a long-time holder, does there seem to be a lot of energy? There doesn't seem to be a lot of energy and hope. And that's Lance in Lutz, a suburb of Windsor, Colorado. Right now, let's go. We'll look back a little farther at here. You're back up to previous highs. You went up there again. Like I said, very tough to say when you actually look at the July 23rd, 2015 high. You had 30 million shares. You got into that on March 8th with 30 million shares. There's just not a huge amount that says anything more than some rather large trading ranges. In this case, from $38, $34, depending on which way you want to look at this thing, up to about $60. You kind of went above it. Wasn't enough energy to reach escape velocity. You're kind of tailing out here. Is there a great thing that says this stock's going to $100? I don't see it. If you're a long-term holder of it, I don't know at what price you own this thing at. If you rode it all the way down to $34.25 on February 11th, was that a deal? I don't know. To me, I just don't see right now all that much reason to be in the financials. You're up here pretty much at the top. I would probably, I don't know, maybe you made a lot of money on this thing, maybe you haven't. If you made a lot of money on it, maybe I'd hold it. But for the most part, I don't see any reason why. You're pretty much up at the highs. The best you could do was about the same volume. Maybe you break out and go a little higher. Just looks to me like if you were stuck in this thing, I'd be more than willing to ring the bell on this right now. So just don't see that much out here. We'll see if there's a few more I wanted to look at. We looked at McDonald's, LRCX, another 52-week high today, which is Lam Research. Again, very tough to see any of these stocks giving a signal saying to go short on them. We'll look at the IBB, and we don't have time. But the last 3 days, you got a nice sign of strength on the 19th on LRCX. The next day, a fairly decent volume of 3.2 million shares today, 2.1. So does it come back to 130? I think it could, but if it comes back on light volume, 130 is more of a buy than a sell. Again, we'll be looking at Monday, Tuesdays as maybe something that will get us out of these doldrums where we're stuck right around the 2350 level on the S&P cash. But I'm not counting on it just yet. Sell when you can, not when you have to, and we'll see you Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.